basically giving them out like bits of paper that say this is for this bit of gold, but you don't actually have it.
Yes,
Basically, right?
that's exactly right. That's the way I understand it. And there's also, I mean, swaps, leases. Sometimes these are interchangeable. It depends which way the exchange is going as well, right? Whether one's buying or selling, or I should say leasing, leasing or borrowing. But there's something, some information on my book that you might recall that confirms that the central banks are using these. And I'll go back to a quote by former Federal Reserve Chairman Alan Greenspan. Okay. He testified before the House Banking Committee in 1998. And it was during a hearing to determine whether derivatives should be regulated. Okay. These financial derivatives should be regulated. And he opposed it. All right. But in his testimony,
of course he did.
Yes. In his testimony, he said this: central banks stand ready to lease gold in increasing quantities should the price rise. I want you to think about that. He admitted that the central banks are leasing gold, even though I just told you the Federal Reserve doesn't have any gold. That's the U.S. Treasury's gold. That's the American people's gold. But somewhere along the line, somebody authorized our central bank to lease the nation's gold. Okay? Let me break down the quote a little bit further. He used central banks, okay, which is plural. So he was speaking more than about the Federal Reserve. He was speaking, I presume, about other Western central banks, okay, that are colluding, if you will, working in partnership to lease this gold. And he's saying they're going to lease this gold should the price rise. Well, why would they lease gold if the price rises? To control the price, to suppress the price, not to increase it. So right there is public testimony from a former central banker of the United States suggesting the purpose of this leasing of gold, okay? I have another example in the book. Do you remember the quote from Terry Smeaton, former head of the Bank of England?
Oh,
he was
yes,
foreign exchange in the foreign exchange division. This was a year earlier in 1997, and he was speaking to the Bank of International Settlements Gold and Foreign Exchange Market Committee. And you might know the Bank of International Settlements is the central bank of central banks, okay?
Yeah.
So this is a quote from Terry Smeaton, former head of the Bank of England's Foreign Exchange Division. He said, in May 1996, the market traded the equivalent of $3 billion of gold daily. Swap deals accounted for 75% of the volume. Now think about this. He's saying paper trading, these swaps were 75% of all the gold trading in May of 1996. That's how they set the price, through this huge volume of paper or imaginary gold transactions.
So are these? Sorry, when we say 75% of the swaps deals, I do remember the bit. I do this now. This was actually this piqued my interest. So like when they say 75% of the volume was swaps deals, right? Does that mean that 75% of all traded volume involved these paper like things, or do they mean that 75% of it was literally involving central banks creating the swaps deals?
It could be one in the same, or they could be doing these swaps with bullion banks as well. I'll go on with Smeaton's quote here.
Yeah,
He added, gold leasing was also a prominent piece of the market, whose growth central banks were very much a part of. So he's admitting that the central banks are responsible for these gold leases in the futures market. Okay, and he was telling this to the other central bankers from Europe, Japan, and the United States. He also added that the central banks bore, and this is kind of funny actually, he said the central banks bore some responsibility for the gold leasing market since it was their activity that made the market possible to begin with. Well, yeah, shouldn't they be responsible if they created the market for these swaps and leases? I mean, but there you have it. That's, I mean, he's admitting they're responsible for this. And in doing so, he's telling me they're responsible. The central banks with the bullion banks are responsible for the manipulations in the precious metal markets and the price suppression for decades.
So like say like some person comes out and they go and they buy some gold, right? But it turns out they bought one of these like paper things. Like, yeah, it's basically like, it's so insane. What you're telling me is essentially the same proposition as like everyone suddenly discovered about the stock market during the GameStop saga. Like all the people who were like trying to figure out what the fuck happened with it. They suddenly started looking at like the foundations of the market and at the DTCC and at this firm called Seed & Co. who actually hold all of the shares of all of the companies that are traded on the New York Stock Exchange and the NASDAQ and all of them. They hold them all like officially there, and then everything that people are trading are just like IOUs for the real thing.
Right, sure.
It's
the same thing.
Like what?
Same thing. Lots of shams, lots of fraud. You know, I mentioned this in the book as well. The fraud goes far beyond the precious metals. Mm-hmm. It involves most of the financial markets. I mean, these bullion banks have been fined hundreds of billions of dollars for rigging the foreign exchange market, interest rates, bonds. I mean, it just goes on and on. And here's the big thing. The largest bank in the United States, J.P. Morgan, okay, which I think it was in 2000, paid $920 million for manipulating precious metal markets. This bank has been, is a 5-time felon, okay? It's admitted to 5 felons, and it's still operating. Okay, explain that to you. If you had 5 felonies against you for rigging financial markets, do you think you'd be allowed to continue to trade and operate as a bank? No. But they're in this symbiotic relationship. They pat each other on the back. And these fines that the government imposes, they're just a cost of doing business, because the banks make a lot more than that. But the government agencies have to feign enforcement actions, but they don't shut down these corrupt banks who are doing illegal things. They continue operating. And in fact, their CEO gets huge bonuses, $1 million bonuses.
Multi-million.
That's right. And even the traders who do the unlawful acts are well compensated. We have a couple that were just convicted earlier this year, JP Morgan traders, for spoofing the markets, for making money off of these fraudulent trades. They've yet to be sentenced, but the way I see it, they're low-hanging fruit if the CEO can get bonuses off the same activity.
Yeah. Well, yeah, they all get compensated very well. I mean, it costs a lot to buy someone's soul.
And sometimes not all that much, I think.
Well, yeah, it depends on the person. Right. Set their own prices. So, thanks for making it all the way to the end of the video. Don't forget to like, share, subscribe, and leave a comment for us in the comments below. Let me know what you thought and if you'd like to see more of this from the show. Thank you, and we'll see you again next time.